Three myths about Indian financial crisis.
So the forbearance was not announced in response to crisis
Yes.
or in anticipation of crisis.
It was already planned.
It was already planned.
Already planned and in fact implemented before the peak of the crisis.
Correct.
Government finances reducing capex,
Yeah.
but at the same time maintaining capex spending
Correct.
was the motive. So the real banking crisis happened because of continuation of these policies beyond crisis. Hello all, welcome to Finterpret episode 8. This is Prasanna Tantri. I teach finance at ISB. With me is Hrishikesh Relekar. He's a researcher at ISB, graduate from IIT Madras. So, he works as a researcher. Hopefully, he will go to a very good university as a PhD student and come back as a professor in some time. So, the topic that we are going to discuss is about banking crisis in India. So, last week we discussed the evergreening, and a lot of you wrote to us saying that you need some background, why did banks do this evergreening and what was the whole background in which this was happening. So, we thought we will discuss another paper titled When Emergency Medicine Becomes Staple Diet, Evidence from Indian Banking Crisis. This is a paper published in Journal of Banking and Finance. I have co-authored this paper with two researchers like Hrishikesh. Hrishikesh has also worked on this paper. Nitin Manil, he is currently a PhD student at LSE, London School of Economics, and Naman Nishesh, who is at UNC. So, these are two researchers who worked on this paper. So, what's the issue here? The issue here, before we get into the paper, Hrishikesh, I think it makes sense to describe some terms. We did it in the previous episode also, but I think it makes sense to talk about it. Three important terms that people have to know. I'll get into the paper. Basically, the point we are going to make, the title that we have in mind is three myths about Indian financial crisis. When I say Indian financial crisis, many of you know who follow Indian economy, non-performing asset, the bad loans of banks went from around 2% in 2007 to around 11% in 2018. This is a kind of crisis. If it was not for government-owned banks, India would have had a crazy crisis with many banks closing down. It's because banks were government-owned, they continue to perform. So, it's very, very important for us as citizens to understand what led to this crisis, so that such a thing does not happen in future. We understand when such policies are made, we can caution policymakers and so on. Yeah, so before we get into the paper, I think Hrishikesh, we have to clarify some terms. We did do it in the last episode, but still there are people not from banking background. So, before we say three myths of Indian banking crisis, so some terms are necessary. Three important terms are NPA, provisions and restructuring. And finally, the fourth one is forbearance. These four we have to get out of the way, right? So, we will be in some classroom mode for first 10-15 minutes. Viewers, please excuse us, but that's necessary to understand what we are saying. So, now let's try to define NPA, or in a simple terms. Is it right to say that if you, for a monthly loan, if you miss 3 installments, it's an NPA? What do you think?
Yeah, it's completely.
It's like 90 days, right?
90 days.
So, if a loan which is overdue for 90 days is considered, for most category of loans, it is NPA if you miss 3 installments, right? Now, again, the second point is what happens when a loan is an NPA? That's where provision comes in. NPA does not mean bank has lost money, right? So, it is only that bank starts anticipating that some of these NPA loans which have become NPAs may not pay anything later. So that's why they have to create provisions. Provisions is you setting aside something from your profits, so that if this NPA guy does not pay up, so you have some reserves, some resources to cover. Otherwise, suddenly bank will go bust. So let's say, just to take a hypothetical example, if a bank has lent 100 rupees and if 10 rupees loans have not come, and that's an NPA for 90 days, and bank may think that 10% of it may not come in. So that 10% that it takes out of profits, that's a provision, right? That's where we are. Now, you know that there are different categories, right? Can you substandard?
Correct.
Right?
Standard, substandard, doubtful and lost.
Yeah. What is this? Can you explain?
Yeah. So, now you correctly described what is NPA, right? So, but within this NPA, there are 3 categories: substandard, doubtful accounts and loss. These are asset categories defined by RBI.
Right.
So, the standard account is when the account is not in NPA position, then it remains in standard.
Somebody who is not missed 3 installment is a standard asset.
But if account remains in NPA position for less than 1 year, then it will be substandard.
Right.
And if it is in NPA position between 1 year to 4 years, then
Right.
it will be called as doubtful, and above 4 years, it will be lost account.
Yeah, so loss, audit, if auditor says, this
Correct.
was that time, now the
Correct.
regulation, we are talking about 2008.
2008,
So
yeah.
regulations have changed. This is important, people have to
Correct.
remember.
Correct.
So then, is it fair to say that longer a loan is in NPA,
Yeah.
higher is the provisioning?
Correct.
Right?
Correct.
When your substandard maybe 10%, after that it increases, when
Correct.
your loss it's 100%.
Yes.
Right? So the whole idea is you should be prepared for a loss. Idea is to preparing yourself
Yeah,
for a loss.
in
right?
anticipation.
In anticipation of
Yes.
loss. Now restructuring is slightly different. Restructuring is giving some kind of relaxation to the borrower. A genuine purpose of restructuring is that if you think that a borrower is in temporary trouble,
Okay.
not able to repay a loan, you give some interest rate relaxation, more time and all that.
Okay.
And you have studied Basel norms, which is the international norms.
Correct.
And is it correct to say that in most countries, if you restructure a loan,
Yeah.
you have to treat it like an NPA?
Correct. Yeah.
Right?
You're absolutely right. It will be downgraded from standard asset to
To a substandard. Even if the person was paying on time,
Correct.
moment you restructure,
Movement you receive.
suppose I have given you a loan and I give you, you come to me, I am a banker and you are a borrower,
Yeah.
you come to me asking for, like, instead of 3 years, can you give me 5 years?
Yes.
Or instead of some installments you don't pay.
Correct.
So our producer is now worried that our viewership is not picking up. If it doesn't pick up, some of his loans may become
Correct.
NPA. So if the bank gives him more time, so you are saying international standards require that needs to be treated as NPA.
Yes.
This is conservatism, right? The fact that I'm giving you some concession as a
Correct.
bank means you're in trouble.
Yeah.
And there is a possibility that some people whose loans are restructured may not pay back.
Yes.
So I think this is the intention and
Yes.
this is the whole rule. Now the last term. So we've described NPA, we described provisioning, we described restructuring. The last thing is forbearance. So what is forbearance? Can you explain?
Yeah. So the forbearance means in this particular case, there could be various types of forbearance. Forbearance in literal sense is nothing but holding back.
Yeah, not
holding
doing, not enforcing something.
Not enforcing something.
Yeah.
Right. So in our case, basically, if you restructure the loan, then the asset will be downgraded to substandard category, right? But with the forbearance, the asset will remain only in standard category, even after the restructuring.
Okay.
So that
this
is
is like a
kind-
washing machine.
Correct.
Right? So you are, let's say, the way I can misuse this as a
Yeah,
banker,
yeah.
that if I know that you are in trouble,
Yes.
you're going to default.
Yeah.
So I just extend your loan.
Correct.
Instead of 3 years, I'll say 5 years.
Yes.
Or instead of say, I'll give you a moratorium.
Yeah.
So earlier rule, when there is no forbearance,
Yes.
I have to call it an NPA.
NPA.
Moment I call it an NPA, I have to put some money out
some
from my
money.
profits.
Yeah.
My profits will go down, my share price will go down,
Correct.
my capital will go down.
Yes.
But in this case, because if there is a forbearance, forbearance is exercised by the regulator, right?
Yes.
It's like holding back. Then you as a regulator, let's say you are RBI, you are allowing me to restructure
Yes.
and not consider a loan as NPA.
Yeah.
So this is like, there is a genuine purpose, let's discuss that. Can we first discuss the genuine purpose?
Yeah.
In a crisis, is this useful?
Yeah, definitely. In crisis, firms face different types of liquidity shocks, right? Demand shocks. Their demand goes down.
Right.
In such situations, borrower, let's say if a firm, which is a manufacturing firm selling different types of products, might face a decline in revenue, right? And it will face difficulty in repaying the loans. In such cases, if you give that firm a moratorium period of 12 months, let's say, then after the 12th month, it can again start repaying the
If
loan.
it's a temporary
It's
issue.
temporary shock.
So if they are facing a temporary issue,
shock,
some crisis or something
Yes,
happened,
something happened.
and if you don't give them time,
Correct.
business will shut down.
Correct.
Lot of people will lose jobs.
Yeah.
So it's a good thing in a crisis.
Correct.
But then if it is continued beyond crisis,
Correct.
or there is also bad side of it,
Yes.
where banker may start, as I said, treating it like some kind of a washing machine, right?
Yes.
Anybody who is in trouble, I'm just instead of calling it an NPA, I know that business is completely gone. We had a lot of businesses, and even then, I'm going to retire in 2 years. I just don't want this loan to be called NPA in my tenure. If I'm a CEO of a bank, I'll just restructure the loan.
Yes.
This is a misuse that's also possible.
Yeah, that is
So this is where our paper comes in.
correct.
We try to study the misuse of this forbearance,
Yes.
Indian forbearance episode.
Yeah.
That's the whole idea of this
Yeah.
paper. So before we discuss the paper,
Correct.
so let's discuss about some myths about Indian banking crisis. A paper will come in as answering one of the myths. One thing that you hear about Indian banking crisis, including from the government, which was the party which was in the opposition then, that it is a lot of these forbearance policies. India introduced forbearance policies. We should tell the viewers
Yes.
that in 2008 there was a forbearance in India. So we explained what forbearance is.
Yeah.
And it is somehow thought that this forbearance that was announced in India was in response to global financial crisis.
Yeah.
You know, everybody knows that in 2008 we had one of the worst financial crisis, even the recessions ever after the Great Depression.
Yes.
And it is said that origin of Indian banking crisis is a forbearance policy which was announced in response to the global financial crisis. In fact, there are a lot of economists who say that. There are a lot of scholars who say that, and in fact, the government, today's government, which was then in opposition, in their white paper that they issued, they also think that this was in response to a global financial crisis. So, can you throw some light on the origin of, this is something that you told me. In fact, you will not believe in the paper. I have also written that this was in response to global financial crisis. Everyone who has written these papers on this start with this assumption. You know, sometimes some narratives, how they become facts. This is one example.
Even all the newspapers,
everyone, you know, including the opposition, of then opposition, which is now in power, all have accepted that although they criticize the policy and all that later, but the starting point is the forbearance policy was announced in response to the crisis. So can you throw some light on what was this policy? Was it actually in response to the crisis? What is your research on this telling you?
Yeah, definitely. So we have to go back to March 2001. So I'll start from March 2001 and I'll build up on the story.
I'm not sure you were born also. Okay, fair enough. Let's go back.
I was born in 1998, so I was 3 years old. So in the March 2001, RBI first came up with this circular to allow loan restructuring, and they laid out certain guidelines.
So 1 minute, when you say allow loan restructuring, loan restructuring is always allowed. What you actually mean is you allow restructuring with
certain guidelines.
With forbearance.
No, without forbearance.
Without forbearance.
Without forbearance.
Right.
Yeah.
Okay.
In March 2001.
Okay.
Yeah. But you have to follow certain guidelines.
Okay.
If you want to restructure your loan, right? And between 2001 to 2007, there were a couple of RBI circulars which announced, different types of policies. Like they announced 2 typical mechanisms that were used for restructuring loans. Those 2 mechanisms were CDR and SME mechanism. CDR is corporate debt restructuring mechanism, and SME is small and medium.
So whenever a borrower is in trouble,
correct,
bank had this option. So there was a CDR cell. I remember reading about it. It was a committee of bankers, like we have bankruptcy code and all of that today. So you had to take a case to committee of bankers, and then they will decide what. And this was for large loans. And in that process, during that process, you don't have to call it an NPA. That was there with CDR.
No. After the process is completed and your restructuring package is approved, then you will not call that account as NPA.
So that is that way of forbearance, and this another mechanism applied to small
and medium enterprises.
But for most loans, it was like if you restructure the loan, you have to call it an NPA, and then start provisioning. Right? This was the rule before 2007.
Correct.
So now what happened in 2007?
So in the annual policy statement of the RBI of 2007, what they found is there is inconsistency or non-uniformity between all these types of restructuring packages, CDR, SME, others, etc. Right? And they wanted to maintain certain kind of uniformity. They found that the mechanism of CDR is conceptually robust and sound. So maybe why not extend this mechanism to all types of loans?
Okay.
Yeah.
Okay.
So hence they constituted a committee. So this committee
was an internal committee of
RBI under the leadership of Saran, who was a chief general manager at RBI.
Right.
Okay. And the committee,
so the idea was, look, if I understand correctly, there is this corporate debt restructuring mechanism where certain type of restructurings are treated in some manner. There is this SME thing, and then there are all of these loans. So can you treat all of them uniformly, or can you bring in some framework where all of them treated uniformly?
Or borrow these good ideas from CDR framework and apply to all other types of loans.
This was the stated objective.
Yeah, this was the stated objective.
Right.
And on April 23rd, 2007, this Saran committee came up with a report stating that how to extend this restructuring package to all other types of loans. And they had different points mentioned, like different criteria. But the restructuring package or the mechanism to restructure the loan was still stringent. You have to go through all those sales committees, standing committee, working group,
all of that.
All of that.
This was the recommendation of the committee.
This was the recommendation of the committee.
Right.
But on August 27, 2008, finally RBI came up with this regulatory forbearance policy.
Right. Which all of at least researchers know.
Correct.
Yeah.
But in that policy, they simplified everything. They
Right.
just said that you can restructure your loan by yourself.
Right.
Like bank has all the powers to restructure the loan.
Right.
And the loan will not be called as NPA.
So remember, these dates are important.
Correct.
So this whole process started in 2007. Not even the first hedge fund in the US had gone bust.
Correct.
Right? It has nothing to do with the crisis.
So according to NBR, National Bureau of Economic Research and Federal Reserve, the first phase of GFC exposed, those dates are defined exposed, right? Started on 9th of August 2007. So this was before that.
So GFC is global financial crisis.
Correct.
So this was way before that, and the purpose had nothing to do with financial crisis. Purpose was to make uniformity. Even the recommendations were stringent.
Correct.
And this was implemented on August 27, 2008. That was implemented.
Correct.
But I'm sure the decision to implement must have been taken long back because these are put in discussion and all of that. And then even August 27, 2008 is good 20 days before the Lehman Brothers collapse. You know, after the fact, we know that 2008 crisis was very bad. I know by 2008 you were still in school. I was, I was not. I was working. We know that up to collapse of Lehman Brothers, it was not sure that it's going to be such a bad crisis. That is why US Fed did not rescue Lehman Brothers. One of the reasons they did not rescue is they thought, let them fail. What's a big deal? This is private sector. Let them fail. Even they had no idea that it's going to lead to such a big crisis. And a lot of us innocently believe RBI somehow knew that this is going to be such a bad crisis. So that's so well in advance, some 20 days in advance, they announced this circular, which was thought through, like they started thinking 1.5 years in advance that this is going to come, and they prepared, and they then launched a policy where which was more liberal than what the committee recommended. So this is a nice thing with bureaucracies. What happens is, let's say if there are two identical goods, one is taxed very high, one is taxed very low, and you go and tell them to make this uniform. You know what they do? They will increase the tax on the lower. They will make both bad.
Both bad.
Right? So there was some people who were treated in concessional manner. Others were treated properly as per international standards. Instead of making everything as per international standards, what they now made is everything against international standards. So basically, what happened after August 28, 2008, is that, if I understand what you're saying correctly, is you can just restructure a loan. And you don't have to call it an NPA. So there was some requirement of security, and infrastructure was treated differently. Can you explain that?
So the first of all, the first criteria was the loan should be fully secured. Right? All the loans that you are going to restructure, that should be fully secured by a certain type of collateral.
Right.
And there was further relaxation given to two sectors to this criteria basically. So these two sectors basically were given preferential treatment. First sector was small scale industry, and second sector was infrastructure sector. So for these two sectors, even if your loan is not fully secured, let's say it's partially secured or fully unsecured, still you can restructure the loan.
So basically, infrastructure loan free for all. Just restructure, lend to infrastructure as a bank. You don't have to worry about NPA. If it turns out to be NPA, then you restructure and keep restructuring. Now, the best thing, we have seen, you have worked on this paper and we have discussed this. So this, after they issued the circular, is when crisis happened. It was not a response to crisis. Now they got an excuse to make it even more liberal, right? Because that is where, in fact, I remember you telling me that first draft doesn't even talk about crisis, right? Does the August 27 refer to any crisis?
It doesn't have any mention of crisis.
It is only after. So December and all that. So then they further made it open to all, free for all. Can you tell me how they kept liberalizing the whole thing?
So then they announced series of RBI circulars, as you said, and in this series of RBI circulars, they relaxed, different types of kinds of criteria that were there in the first circular. So on December 8, 2008, they announced another circular where there was a first mention of crisis, and because of the crisis, they said that we are extending this policy to commercial real estate sector.
Okay, so earlier, real estate and capital market transactions, if I remember correctly, and personal loans, consumer loans,
consumer and
these
personal
three
loans
were excluded because they are considered very risky. Now they use the crisis as an excuse to add real estate,
Yes.
add other types of loans.
Correct.
And if I remember correctly, multiple restructuring.
Yeah, second time restructuring was allowed in this.
And in a way, I remember vaguely that even willful defaulters, those who considered willful defaulters, you can restructure.
Correct.
Basically, completely open for all.
Yes.
Now, but as we discussed earlier, that I don't think this during crisis this was a bad policy, right? We already said.
Correct.
Although the purpose of explaining this to viewers is that to tell them that most people and we don't question their motives, maybe innocently believe that even 5 million before you told me that this is a circular which is all these policies were announced in response to crisis. That is what we want to clarify to the viewers.
Yes.
We are not saying that such policies are wrong during crisis. In fact, they are correct. They are necessary. If this was not done during crisis, then many of the banks would have gone bust. Many of the, when a bank goes bust, other borrowers who are in good shape, they also don't get credit. Then it becomes a chain reaction.
It becomes vicious cycle.
It's a vicious cycle, and everybody goes bust. So I don't think that's an issue, right? The policies that were implemented during the crisis were correct. They were fine. Government did the right thing that time, and even the RBI did the right thing. But then this narrative that all of this was created in response to the crisis, that is not right.
That is not
Something was getting done anyway, and crisis happened, and this was sort of fit into the crisis. This is the way you have to explain. So next time when an economist or someone comes, okay, that was all crisis response gone bad, you should tell them it is not crisis response. It was already in the works. It was issued before the crisis really blew up, but then it was used during crisis. Now that is fine. Now the second myth, this is the first myth. The first myth is this was not crisis response. It was used during crisis. Now let's come to the motive. Why was, now that we know that this was already in the works before the crisis. See, one thing is to just rely on whatever the notification says is the motive. But the other, as researchers, we have to figure out what is the actual motive. Right? Now, can you tell me that what do you think? And this we have in the paper also. Why do you think such a move was planned way ahead of crisis? And what could have been the possible motive behind this?
Correct. So I will just quote your paper in this thing. So one of the possibilities behind the theoretical possibility hypothesis that we again in this paper prove empirically that if you look at Indian budgets starting from 2003-4 till 2009-10, right? There is an important indicator called capex to budget ratio.
Capex is capital
expenditure.
Money that government spends on roads, highways, infrastructure and all that, right?
So the total money that government spends on capital expenditure divided by total budget that is announced during that year. That is the ratio we are talking about. And if you look at that ratio carefully, then that ratio, the value of the ratio in the year 2004 was somewhere around 24%.
Yeah, 14. And as a percentage of GDP, it was around 4%. If you take as a percentage of national income, it was around 4%, if I remember correctly. Yeah, go ahead. Yeah.
And it started decreasing starting from 2004.
Right.
And if you look at the same ratio, the value of same ratio in year 2009, it was almost 10%.
Right. From 25% of the budget to 10% of the budget.
Correct. So there was a significant reduction in this value of this ratio. Right. So, but if government is not investing in the infrastructure projects, then who else should invest? Right. So there is another mechanism that you describe in
the paper. Right.
So PSU banks, right? Public sector public sector banks. These banks generally provide loans to all such types of infrastructure companies.
Right.
So if you, instead of giving a larger share from your budget, if you push these banks to give lend to such infrastructure companies, then your job is very
but then there is a problem, right? If you push these public sector banks to lend to them, what if these loans go bad? If this loan goes bad, then government has to capitalize. So solution to that is forbearance. Right? That completes the cycle. So now government is not spending on capex. If the government is spending, then you don't want to halt these projects. Who is going to spend? You make these public sector banks spend,
Correct.
but it's lend to these sectors.
Yes.
But lending too much money to this sector
Yes.
is risky. These are long term,
Yeah.
and you know there were
They have
all
to
of
pay interest rate on it.
interest rate, and then there were issues with you know environmental
Yeah,
clearance.
yeah.
Lot of these projects got stuck.
Correct.
Now when they get stuck, this
Yeah.
becomes NPA.
Yeah.
Now we know this whole thing. When
Yes.
it becomes NPA, then you have to provision. Capital goes down. Provision
Yes.
is hit on capital.
Correct.
Who owns government banks?
Government.
Government itself. Then they have to put money again
Correct.
from the budget.
Correct.
How do you avoid this whole cycle?
Yes.
Just announce forbearance.
Huh.
So this is our speculation. The
Correct.
second one is our speculation.
Yeah.
Is that one important reason why this forbearance policy was thought of way before crisis?
Yeah.
Because the reason is infrastructure was given specialty.
Preferential treatment.
See, the 2008 crisis was not an infrastructure crisis.
Correct.
You know, it was a financial crisis
Financial
globally.
Yeah.
Indian infrastructure
Yeah.
is the least connected to global financial crisis. I could have understood if they had given this to exports. Because when there is a global financial crisis, export is something that will be hurt.
Yeah.
If there was some special package to export.
Yes.
But it was specifically designed for infrastructure is this reason.
Yeah.
And we know that in 2008 there was a large scale farm waiver.
Yeah.
You know, it was something like 2% of GDP.
Yeah.
You know, 1.8 or something, which is something like, so today if you give something like 4.5 lakh crores, 4.5 5 lakh crore if you give, 1.6 1.7% of the GDP.
Yes.
So when you spend so much from the budget, so you will not have money to spend on infrastructure,
definitely.
and then you make banks to spend.
Yes.
So this is the motive,
Correct.
which we speculate.
Yeah.
And this is some lessons for policy today also. Again, our intention is not political. Any government does this is a problem. Today we have some hard-nosed infrastructure fans
Yes.
in all government. They don't realize that whenever you spend on infrastructure, most of this is heavy leverage. Even when government spends, it's not that government puts in all the money. It will give some contract to a private sector, L&T or anyone. Lot of these projects are with heavy leverage, and then you never know if something gets stuck. Some approval, if they are not getting executed on time, this can blow up. This is what, and then you have two options. One, cleanly go and accept that there is a trouble, clean up the bank, recapitalize them, or do this forbearance. So our view is, or at least what we think is, this forbearance was such a policy which was done to hide this, whole funding of infrastructure from PSUs, and those projects going bad, and then troubling the PSUs and backwards troubling the government. This was the whole policy. Whichever government does this, and then fortunately global financial crisis came, and this became a nice excuse. Now you could have, you can sell this policy to the world. Look, we are doing this for global financial crisis. Everybody kept quiet. This was second myth. Now the third point still baffles me, and that is where our paper comes in, and you can also pitch in that. If it is only crisis, it should have gotten stopped in 2011. By 2011 GDP growth was, you've seen the number. What is the number? 9%?
Yeah, 8%.
8, and we were touching 9% also. There are quarters where we hit 10%.
Correct.
So a 10% growth, you don't do forbearance. You don't do, these are crisis policies, right? But because this was done for a particular motive, and that motive continued, this was continued after 2012, right? So can you explain how do we proceed with the paper? So what's the third point of the paper about the message of the paper? I will also chip in. So what do you think is because you also worked on the paper.
Correct.
What is that we sort of add in this whole debate? This is all, so far this is all identifying circulars and all of that. What's the new thing that we are adding in what do you think, at least? I claim I have added, maybe you may not agree. So yeah, what's your view?
Yeah, so basically you are asking about the mechanism behind this paper, right?
Right.
So in academic sense, why didn't government stop? So I would like to tell our viewers that in 2012, actually RBI constituted another committee to review this, guidelines, this policy, and etc. The committee was called Mahapatra, under the leadership of
Mahapatra.
Mahapatra.
DG, or I don't know, maybe
was Executive Director of RBI.
Executive Director, okay.
And in the July 2012, the committee came up with a report, and the first recommendation of committee was to get away with this regulatory forbearance policy.
Okay.
Yeah. The only thing that they mentioned is you should give advance notice of 2 years to these banks. Right. But on 30th of May 2013, the announcement of forbearance was done, and The forbearance
Was
was
extended.
basically was withdrawn effectively from 1st of April 2015.
Okay.
So it went on from 27th of August 2008 to 1st of April 2015, 7 years of
The
your
funny
period.
part is,
Yeah.
epicenter of crisis, which could be US or those
Correct.
places, even Europe,
Yeah.
they had withdrawn all the forbearance policies. All the emergency policies they had, India was maybe one of the last, in the economic survey there is a chapter
Yeah.
which actually shows India was one of the countries which was the last to withdraw these policies.
Yeah.
This is where we have titled our paper, Emergency Medicine Becomes Staple Diet.
Correct.
So the countries which were the epicenter of crisis, they introduced emergency policies, they withdrew it.
Yeah.
But we were supposed to be less impacted by crisis.
Yeah.
We carried on for 2008 to 2015, 7 long years, right? So the paper, what we looked at in the paper is our claim in the paper, which is our point number 3, is because of this, a crisis got created on its own.
Yes.
That is the point we make, right? The second phase was our own making.
Yes.
So up to 2011, we can still understand.
Yeah.
There was a crisis, global financial crisis going on, you had a policy.
Yeah.
But from 2011 to 2015, 2018, when things became really, really bad,
Yeah.
that was our own making.
Yes.
So what we do is we actually use the infrastructure point you make. Now the question is, you may ask, how do we prove it?
Yes.
Right? A lot of people will say it's a continuation of the crisis. And that is where, when we say it's a research paper,
Yes.
it is not our random opinion.
Correct.
It is based on data, it is based on facts, and which people have verified.
Yes.
So what we do is, we identify 2 types of banks. So banks with more exposure to infrastructure, banks with less exposure to infrastructure.
Correct.
Right? Now, we already explained that between 2008 to 11, those banks with more exposure to infrastructure now are in a better position to use this forbearance policy.
Yeah.
Correct?
True.
Because they just can
restructure the loans because they have
Without
higher
any-
exposure to infrastructure sector, and
Correct.
it's easier for them.
It is easier for
relatively, relative to other banks.
right?
Right.
Now, suppose if I ask you,
Yeah.
if there is a bank with more infrastructure,
Yeah.
if bank with less infrastructure,
Correct.
which bank would have restructured more in
Correct.
this space?
Yeah.
Isn't the answer straightforward?
Yeah. At least my guess is the first bank.
Bank with
which-
more infrastructure
Correct.
would have restructured more, and there's nothing wrong with that,
Yeah.
right? Because they have more borrowers, and who are given this concession, they restructured more.
Correct.
That is not our
It's a
finding.
mechanical reason.
It's a mechanical reason, right?
Yeah.
Now we did another interesting thing there.
Yeah.
Given a borrower in that phase, take any particular borrower
Yeah.
who borrows from both of these banks,
Yeah. Okay.
infrastructure bank and a non-infrastructure bank.
Okay.
Infrastructure bank is a bank which lends more to infrastructure. I'm just
Which
there is no
has
such
more
bank
exposure to infrastructure.
There is no such bank as infrastructure.
Correct.
bank.
Correct.
I'm just making it. I'm
Yeah.
calling them
Yeah.
the bank with less exposure to infrastructure. Let's call it non-infrastructure.
Correct.
Right. Now you said that if I tell you between these 2 banks who would have restructured more during the crisis,
Yeah.
infrastructure banks.
Infrastructure.
Fair enough. There is
Yes.
nothing to be alarmed about.
Yeah.
Now I ask you another question. If I take a borrower
Yeah.
who has a loan from both of these banks
Correct.
during the crisis,
Yes.
now who should restructure more?
So I think both of them should be equally likely to restructure
Right?
the loan. There
Because
should not be any
there
significant.
should be no difference.
Yeah.
Because the policy is not for banks, it is for the borrower.
It is for the borrower.
Right?
Type of the borrower.
Type of borrower. If it's an infrastructure borrower, both should be willing.
Yes.
If it is a non-infrastructure, it should be less willing. Right?
Yes.
This is what we find during the crisis.
Okay.
During the crisis, this is what we find.
During the crisis mean the year 2009 and 10, right?
8 to 10, whatever,
8 to
during the crisis. Right? So the main finding is, if you take a bank which lends more to infrastructure, less to infrastructure during up to 2008,
Correct.
during the crisis, although the banks which had more infrastructure exposure restructured more. Restructured more, viewers, those of some of them would have forgotten what is restructuring. Treating a bad borrower, taking a bad borrower, giving them more time, concession and all of that, and not calling it as an NPA. This is what restructuring under forbearance means. So the point is, if you take total restructuring, of course infrastructure banks did more, but for a given borrower, any particular borrower, there was no difference. That means they did not behave differently. There was no distortion or anything. Less infrastructure, more infrastructure, behaved similar. So far so good. Now what happens after 2011, that is where your Mahapatra things come in. Now the bank knows that this policy is not going away. Every bank, they all know. So banks know that these infrastructure banks know that most of their loans are actually bad. Because on an average they have restructured more. And they also know that this policy is not going away. Right? Now if I ask you a question, if a given borrower, what would have happened after 2011? for a given borrower, who would have restructured more? What do you think? If there is no distortion in incentives and with more distortion in incentives.
Yeah, so if there is no distortion in incentives, then
there should be no difference.
Yeah.
But if there is a
distortions, right? Yeah, then I guess infrastructure banks.
This is the point. When we say distortion in behavior, we are saying for the same borrower who has a lending relationship with both an infrastructure bank and a non-infrastructure bank, what we find is this infrastructure bank shows a higher inclination to restructure loan. Now, if it is because borrower is in trouble, any bank should be able to do it.
Correct.
Borrower's troubles cannot explain this, right? It is only because, and you talk about mechanism, and we explain the mechanism is these guys have built up bad loans because on an average they have restructured more.
Correct.
What should have happened
during the crisis?
During the crisis, they should have been cleaned up, recapitalized, and brought back to health. Instead, government chose to extend forbearance. Now they know that this is going to dance as long as music is on, and the CEOs or whoever at that time, they knew that they are not going to be in charge when actual things come up. So they now they start going ballistic. Let's restructure everything. So the real crisis in India started after 2011. So this is when this was, this is the main message of the paper, and this is how we show. For a given, it's easy to say that some bank which had more infrastructure exposure restructured more. There is nothing. What's a big deal?
No, what's a big deal?
Because that's what the policy is. That is not our point. Given the same borrower, during the crisis, bank which had more exposure to infrastructure did not show a higher inclination to restructure, which means they did not behave badly. They did not have this distorted incentive. This incentive started when they realized that this policy is permanent. This is why I call emergency. There they treated emergency medicine as emergency medicine. They thought it's a crisis, it won't continue, so let's not do really bad guys, right? And because of this, banks were left with no capital. They were. You remember you had done a lot of this test. Did you see what happened to dividend payment?
Yeah, it went up.
It went up.
Infrastructure bank.
Infrastructure bank.
Correct.
Funny part is their dividend payment did not go up during crisis. So now remember, by restructuring, you are showing artificially high earnings. What should have been an NPA, you restructure and show high earnings. What do you do with earnings? Pay it to government. Dividend, who is the owner? Because most of these banks are PSU banks, right? Owner is the government. So this artificially created earnings was paid back to government. Government is like double happy now. First of all, you don't have to capitalize. Plus, you're getting dividends. So that's one of the reasons this continued. And we also looked at, remember, you took a lot of pain in looking at penalties and, just to show that they have misbehaved. We went to this watchoutinvestors.com.
Correct.
What did you find there? The violations and all that.
So violations of these infrastructure banks, the number of violations that were incurred by these infrastructure banks post 2011 were significantly greater than the number of violations that were incurred by these non-infrastructure banks. And these violations were legal kind of violations that we were looking at.
Regulatory violation. So this is another proof they started misbehaving. So if I have to summarize, look, there are two types of banks which were otherwise very similar. And we have, of course, some of them may be thinking that all infrastructure banks are government banks, all non-infrastructure banks. We have handled that, right?
Correct.
Can you explain?
So we are not distinguishing between public sector banks and private sector banks, and we are not another researcher can do one thing that, let's say, take out only public sector banks from the data and within all banks, and then classify infrastructure banks and
you can do that in private sector. So
sector.
ICICI Bank, for instance, has more infrastructure than HDFC Bank. Right?
Correct. So, but we are not looking at the ownership at all.
Right.
We are just looking at the banks, their exposure to infrastructure sector before 2008. That this is important, right? Before 2008, we are taking 3 years average, starting from 2005 to 2008. We are calculating, the loans, the amount of loans lent to infrastructure sector. We are dividing it by total amount of loans that were given by these banks. and we are using this ratio to classify the bank as infrastructure bank or non-infrastructure bank, and we are not taking the ownership into account at all.
Right. So it is not that after knowing the circular, these guys increased infrastructure exposure. You know, it is not knowing about the circular. It was before the circular. So just to summarize the results of the paper, the main finding of the paper is that, look, the banks which got concession from the policy of liberally sort of restructuring or under forbearance, they did not misbehave during crisis. You know, it has to be very important. We should, you know, it's not that a government was at fault or RBI is at fault. What they did during 2008, although we think it is not because of it is not because of crisis, they were anyway going to do it. But that was the correct thing to do. There's nothing wrong with that.
We should not discourage that. Basically,
we should not discourage that. We should not say you shouldn't do that. That was because the first part of the paper, you know, sometimes we sort of talk about this paper as if we have found something wrong. We have actually found something not wrong about the first part. Those banks which got concession did not misbehave. They did not restructure more for a given borrower. Although total restructuring was higher. That is because they have more borrowers in infrastructure. But given borrower, they were not more liberal. They were not violating rules more. They did not pay more dividend. None of that was there. All this started when they came to know that whether or not economy is down, this is going to be permanent. When banks realized this, that this is a permanent policy, because you can keep extending. Now you say 2015, then you can make it 2018, who knows. So then they started misbehaving. This was the main point of the crisis. So the real banking crisis happened because of continuation of these policies beyond crisis. That is the main message of the paper, and that led to explosion of NPAs, non-performing asset. And finally, when the the audit was done, have you looked at that result of our paper? These banks were the audit, the AQR. Can you talk about that?
Yeah. So on the 1st of April 2015, when the policy was officially taken back, then RBI Governor Dr. Raghuram Rajan announced something called as AQR, which is Asset Quality Review, right? So as you said, these banks were showing inflated accounting profits and etc. So it was really necessary to go into these banks and check what are the true rates of NPAs, right? And they carried out this AQR till 3 years down the line, starting from 2015, 16, 17, 18, and etc. So in the year 2018, when they were in the final period of the AQR, right, the NPA level, right, was at the peak,
right?
Yeah, as you said, right.
12%, 14%. And for PSU banks, if I remember, 16%.
16% or something like that.
And we find that these infrastructure banks had the highest divergence.
Correct. So I will explain the divergence for our viewers. So the divergence, we basically created a variable called divergence, which was nothing but the difference between this accounted, like the NPA reported in the accounting report versus the NPA found by AQR.
The RBI.
By the RBI, basically.
Audit.
Correct. So if the difference is higher, that means they are hiding the bad assets, right?
During that time. It was the thing that was created during that time.
Correct, during that time, yes. So for these infrastructure banks, this difference, this divergence was significantly higher than non-infrastructure banks.
Yeah. Like 4, 5, 6% higher, and basically it shows that most of the loans that they made were not genuine restructuring cases. Because if it's initially you started out with saying there is an economic reason for restructuring, right? You said if somebody is temporarily in trouble and it's not a bad thing to do. That in that case, that guy should have come back. If it's a temporary liquidity crisis, this became like permanent, right? So the third myth that we think is that the crisis is not because of 2008 or something. It's not a continuation of global financial crisis. It was a sort of self-created crisis by extending forbearance policies beyond 2011. So the three things that if you just summarize, the first is your discovery. That
correct.
Yeah, you can say that.
Yeah. So the forbearance was not announced in response to crisis or in anticipation of crisis.
It was already planned.
It was already planned.
Already planned and in fact implemented before the peak of the crisis.
Correct.
Unless they had such a beautiful anticipation, this is what baffles me is that everybody starts I started unless you showed me all this that this is taken as given. Forbearance started in response to crisis, so no problem with that. The second thing that we said is government finances reducing capex but at the same time maintaining capex spending was the motive. And this, again, this is not political or government specific. I can see that now, right? The last 2-3 years, government increased capex, but from the budget.
Okay.
Now there is a pressure to reduce fiscal deficit.
Yeah.
Now this year government has said they will keep it at 5.8.
Okay.
Next year the projection is 5.1.
Oh,
there is pressure to reduce budget, reduce fiscal deficit, but not reduce capital expenditure.
Yeah.
Now one way to do it is cut all the social expenditure that the governments cannot do.
Correct.
The other way is use these banks. That should not happen.
Yeah.
This should give a lesson to the government when they want to reduce fiscal deficit.
Yeah.
If they start using PSU banks and force them to fund,
Correct.
this will eventually
announce another forbearance.
then they will be forced to announce another forbearance, and then this cycle will repeat.
Yeah.
So financial crisis can lead to a massive real crisis. The worst part is this will show up 7 years from now.
Correct.
10 years from now. This is somebody like you and me sit and have to dig out, and I need someone like you to dig out all these circulars. Otherwise, nobody will know why was it done.
Even I should tell you this frankly, that when the NPA rates were high during 2017 and 18, that time I was not an economics student, I was an engineering student.
Right.
So I was thinking that maybe this is because of demonetization, GST, all this.
I'm sure you would have done social media posts blaming GST or whatever. That was a favorite whipping boy. Anything happens in India these days, you can blame GST. So this is a problem. So that's why this is relevant today. In fact, one good thing, if I tell you, post-COVID, if you look at, most of the forbearance policies post-COVID, fortunately they withdrew. This is something that we think is a good thing they did. But we have to be watchful, because now we are at a stage where government wants to continue infrastructure but have low deficit. This is precisely what happened from 4 to 8, right? If you want to reduce deficit and continue infrastructure, then reduce other spending. But you want to maintain social spending, want to maintain infrastructure spending, also have low deficit, not possible. Then you have to depend on banks. And once you depend on banks, if you force them to spend, projects get stuck, then you will have to announce forbearance. Otherwise, you will have to recapitalize banks. So we have to watch out for this. People should, when we look at the economy, it's not a linear, nothing is given. It depends on what we do. And this whole study of 2008 to 15 crisis should give some important lessons. So thank you so much, Hrishikesh.
Thank you, sir.
So hope to see you, talk to you on some other paper, and maybe your papers. Hopefully we'll discuss once you come back as a professor.
Yes, hopefully. Thank you.
Thank you.